All right, so we finished the part one, which is called setting an overall bias. And now we're gonna do this on the charts live. I'm gonna explain step by step of what I do and how I do and how I read and how I look at the markets and set my overall bias. So once again, this consists of three things. We're looking at the market structure, we're reading the levels, and we're marking up key levels or magnet zones. So looking at overall bias, right? Looking at market structure, once again, we can use Fibonacci to indicate that. Let's look at those retracements. Remember when we talked about retracements, where when we looked at the chart, the retracement was small, then the retracement was bigger, and then the retracement was even bigger, and then the market followed by a bullish rally. Now we can do the same thing. Let's look at this. First retracement, right? So we're looking at the first move right here, and then retracement, right? So we can pull out a Fibonacci tool, swing high to swing low. We can see that this retracement was 0.5 to 0.618, a regular bearish trend. We can look at another move to the downside, which is impulse retracement from swing low to swing high. We can see that we have the same type of rejection, right, at 0.618. So as we looked at the previous chart when I was talking about examples, each and every one of the retracements was getting deeper and deeper, and this one is still the same. So we don't have a lot of signs of weakness in the bearish trend. We're looking at the weekly time frame. So we identified that we are in a regular bearish market structure. Now let's read the candles. Let's look at the candles, right? We see that we have strong bearish candles. We have weak bullish candles. We really see that the bulls are trying to step in, but if we look at the sizes of the candles, we can notice how the bearish candles are way bigger than the bullish candles, indicating even more strength and bearish structure to our overall bias. And then last but not least, we indicate our magnet zones, right? So on the weekly, we look at significant price changes, right? So very, very simple. Like I said, this was in very detail, but it's very, very simple. We're looking at this. Boom. Strong significance, right? We can all agree that this is our strong significance zone. We have the price rejecting here, going and making higher high. What happens next? The price breaks below, comes back and retests and has even bigger drop. Next magnet zone right here. This is where we had the drop, and look at this, how perfectly the price respected this level right here. Then we have another one right here. So we have three major magnet zones. And how I look at this, okay, since the price broke below, I need another magnet zone at the bottom so I can follow it. And the one I see is right here, right? We have a strong significance as the price had a really strong rejection to the upside, to the downside, and then once we broke above, we had a strong significance to the upside. So now, how I look at these magnets and these waves, we have the price breaking below. Let me make this yellow so it's more clean. Broke below. Our next target is this. So we look for short orders after we reject here. Now the price moved lower, came back to retest, it rejected. We only look for sells down to the next magnet zone. Now we look at the present. What happened? The price broke below the magnet zone. Our job now is to see if the price wants to sit below or if it wants to break above. Now there are two scenarios. If it breaks above, we're going to be looking for long positions down to up to the next magnet zone. And if we break below, like we have in this scenario, then we look for short positions down to the next magnet zone below. Very nice and simple, right? And the last but not least thing that I do is I go to the daily time frame, which is lower time frame, and I mark up my daily support and resistance zones, right? So looking at the charts, we have daily resistance right here. We have significant daily resistance right here. We have daily resistance right here. Yeah. And another important thing is If your daily resistance or support interferes with a magnet zone, this is very crucial. This is a very strong zone. It indicates a lot of zones. Now, another thing, just because on the daily the price broke below the weekly magnet zone, it doesn't mean that the weekly magnet zone was invalidated. You want a weekly candle to close below magnet zone or weekly candle to reject magnet zone. On the daily, the price could break below, but at the end of the week, it could break above. And the weekly candle will look just like this, right? So you want the weekly candle, if it's a weekly magnet zone, you want a weekly candle to break above or reject the magnet zone on the weekly time frame. Very nice and simple. I think this is a replay mode. Let's see what happened, right? So this is the present, right? So now, since you identified that the price broke below, look at this, weekly candle broke below the weekly magnet zone and the daily resistance. Now you have the strong rejection. You can go to the lower time frames and you can look for short positions all the way down to the next magnet zone. And in the second part, which is the next lesson, we're going to talk about, now we're going to go to the lower time frames. We're going to talk about supply and demand. We're going to talk about indicators and entries and how you can look for different zones to enter after you set your overall bias, to enter and to drive your positions lower or higher